Hey guys, happy Thursday. Another Thursday Thunder this week. I've got a busy Friday. I don't think I'm going to get a chance to record it. And because I've missed so many, I don't want to miss another one. So we're doing it on a Thursday. We are going to get straight into it. I shall minimize my screen. Let's have a look. We're going to talk strategy this week. Unused concessional super contributions. This week, the advice warning is very important. But it's just going to be the same as I say every week. Don't run off and make a change to your situation before you talk to me, okay? If you do something yourself, consider that I never spoke to you, all right? If you're going to make a change, if this is relevant to you, let's talk. All right, a concessional super contribution. In Australia, we have this mandate where your employer has to contribute money to your super fund. It's called a concessional super contribution, okay? You have your wage plus the amount that your employer contributes. There are three ways that these contributions can happen. One, as I've just said, is that employer contribution. You earn a salary, let's say it's $100,000, your employer puts 10.5% at a minimum into your super. That's number one. Number two, you can salary sacrifice. You can say, listen, boss, I don't need all of my money. I understand one of the best ways for me to accumulate wealth is through the super environment. So I'd like to salary sacrifice. I'd like to sacrifice some of my salary and contribute that sacrificed amount into super. Still becomes pre-tax money and it's taxed in super at a concessional rate. Not what I'm talking about here today. We'll get into that some other time. And personal contributions for which you also claim a tax deduction. So you might receive all of your pay and at the end of the year in June you go, look, I've got all this money. Look, I've still got this yen sitting here next to me from last week. So you go, I've got all this money sitting in the bank. What am I going to do with it? What a great problem to have. And so you put some extra money into super of your own money and you claim a tax deduction for that contribution. So that's three ways you can get a contribution into super with pre-tax money. What about the strategy I want to talk about? Each year, there is a cap on the amount of money that you can put into super, okay? The cap, how much is it? 18, 19, 19, 20, 20, 21, those 3 financial years, we could put $25,000 into super and claim a tax deduction for that contribution. Whether it was our employer contribution, whether we salary sacrificed, whether we put our own money in, the cap was $25,000, okay? That sounds great. Prior to the 2018-19 financial year, if you say, for example, earned $100,000 and your employer paid you the contributions, which were lower at that point, but let's just say $10,000 went into super, okay? If you got through the end of 30 June, anything that you didn't contribute up to the cap was lost, okay? You started again, July 1, clean slate, let's go again. Our employer's contributing, we're starting from zero, how much they put in, what's the cap, okay? But from the 2018-19 period, if you've got less than $500,000, any of that unused amount will carry forward for 5 years, okay? Now, after 5 years, it rolls over, or it doesn't roll over, it falls off, okay? Best way to explain this is through an example. All right, Sue, she earns $100,000 a year. She doesn't make any extra contributions over and above what her employer puts in. So they're the only contributions, the SG. Now I mentioned in prior years the rate was less. It's currently 10.5, was 10, 9.5, 9.5, 9.5. So her employer on her $100,000 put in 9.5, 9.5, 9.5, 10, and $10,500 for those 5 years, okay? This is the amount that is unused, okay, that would have taken her to the cap. So she put in 9.5, she could have put in 25, which means she didn't put in 15.5. Now, as I said, if you don't have $500,000 in super, that amount that you do not contribute is going to roll over and carry forward and accumulate, okay, which is fantastic. So this year, Sue could contribute an extra $81,000 into super and take advantage of those prior years that she didn't put in. It's bloody fantastic. Now, doesn't work for everybody. If you're 30 years old and you're in this situation, you're probably not going to put in $81,000 to take advantage of it, unless you had a good reason, you win the lotto, you make it, whatever. But the benefit might be let's say you've got someone who's nearing retirement, okay, and really wants to take advantage of loading up, and they didn't have the capacity. They might have been paying off their house for the last few years, and now all of a sudden they're like, hang on a minute, I've got these amounts I can put in. I want to put this money in. Now, you don't have to put in all 81,000 in one hit, okay? All we need to worry about is this is going to be the first year that falls off. So if in this year we contribute to the cap of 27.5, we can put in another 15.5, and it's going to take advantage of that. So you don't need to put in 81 to take advantage of it. You can start to go in this one, and then this amount, and then this amount, and this amount, and this amount. So it's probably more advantageous to somebody who's nearing retirement and has surplus cash flow and wants to really load up on their super to build wealth in that concessionally taxed environment. But like we've said here, it may be a situation where you've got a gain from an investment property or a windfall gain that you've made and go, hang on a minute, I can put a lot of money in. Because you imagine if Sue's on $100,000 this year, tax on $100,000 is about $25,000. If she was to put $81,000 into super, she's going to claim that as a full tax deduction. She's not going to pay any tax personally this year. Yes, the money's going to go into super and pay tax, but at a much less rate, okay? Great strategy. It works if it works. So my point in this, because I'm going to wrap it up, talking too long as I do, is that consider this as an option, okay? If you're nearing retirement, you go, hang on a minute, I want to see how this is going to work for me. Great, let's have a chat about you. If you've made a big gain on property and you go, hang on a minute, I want to reduce the amount of tax I've got to pay, great, let's have a talk to you. Okay, if you just think it's a good idea or you know someone that might be great for, let's have a talk to you. All right, guys, fantastic. 10.5% is the contribution that your employer pays. I got a trick question for you Friday, $100 this week. If you earn $300,000 a year, how much is your employer going to contribute to super? It's a trick question. All right, guys, happy Thursday, Thunder. I'll see you next week.